and welcome to Charting the Markets with me, Sean Murison, Senior Market Analyst at RG South Africa. Markets are still digesting yesterday's Fed meeting, where it was suggested that rates would only start to come down in May rather than March, as some people might have expected. A bit of weakness coming into equity markets. On today's economic calendar, we do have the all-important Bank of England meeting. We aren't expecting any changes in rates at the meeting, at the conclusion of that MPC meeting, but we do want to watch that for clues as towards that path of monetary easing going forward. Also on the calendar, we do have weekly unemployment claims and manufacturing PMI data out of the US. That's later in the afternoon. Looking at some charts and starting off where it does all start, which is the US dollar. We can see from that Fed meeting there, we did have this intraday reversal, some weakness now turned into strength for that US dollar. And our previous week, we talked about this bit of a trend reversal pattern here, this inverse head and shoulders. We had that upside breakout and we're targeting a move at 103.80. Now that move has lacked a bit of momentum and we are seeing the index moving into overbought territory, that dollar index. But the pattern does still remain in play. And so it does suggest a bit of a long bias to trade on the dollar right now. And we do still have that target of 103.80. So for now, it does show that any type of pullback towards that 102.45 level has been viable. We see this little spike down there and that intraday move back up. Traders who are long, they might want to trail that stop loss below 1 or 2 period. I think low, and you could use the body of that, obviously, using that long wick might just increase that risk a little bit too much for the trade. But certainly, if you've got a good entry there, you could be locking in at least a risk-free trade there at this point in time. Looking for new entries, and I think maybe looking for spikes down towards that 102.45 mark. We have seen it being bought up. We've seen these long tails on these candles, this red one here, and this candle we saw yesterday. Now, if you look at the euro-dollar, similar picture, maybe not quite as pronounced. Obviously, euro quite a strong weighting in that US dollar index. But we do have a bit of this head and shoulders type formation. We did have that downside break of support, and we are drifting lower towards that 1.0755 mark. Now we are in oversold territory, and you could argue that there's a broader range in place. So maybe looking for a bullish reversal, price just ticking back close to that 1.075 would favor the longs. I will say though, when you see an indicator like your stochastic laboring in oversold territory, which gives less conviction to a move, even if we do have a move out of oversold territory. So for now, though, that short-term target is 1.0755. We want to see how that market approaches that level. If we have a reversal, we could consider longs, and if we have a downside break, so looking for a close below. I always like to see the price settle below, and we are looking at daily charts. Then we would start looking at lower levels for that dollar index, and for the euro dollar. The next level of support being at 1.066. So a bit of no man's land right now. Want to get closer towards that level. We want to see if it bounces or breaks. Bounce, range trading opportunity. We're targeting me back to 1.0894. And in the event of a break, which we could confirm by using a closing price, or price closing below that level, start looking for a move back towards about that 1.065 mark. Cable will be one to watch today, obviously with that Bank of England policy meeting today. In a range-bound trading environment, you could argue that that sort of short to medium-term trend or that medium-term trend is up, but in the short term, we're definitely in a range-bound price environment, and we are now moving towards that lower level of support, and that lower level of support being 1.2595. So 2 ways of trading a range. One is trading between the levels or waiting for a breakout, and that's exactly what we'd be looking to do on cable right now. So this level seems to be 1.2595 or 1.2600, somewhere in that range. We want to see how that price approaches that level again. So we assume the range to be intact until obviously we see a sort of a higher volatility move below that. So right now, longs would want to see that price just getting towards that level and just seeing at least an intraday reversal, price just ticking back. If you're looking for a candlestick pattern to mark that reversal, it would be something like a bullish engulfing, a bullish harami, piercing line, any of those types of patterns. Basically, a long red candle with a green candle to follow, suggesting that price has found support and moving back up. But if we do break below that, we do have a strong close below that, we start targeting a move towards that 1.2505. So range-bound trading environment at this point in time. We're waiting for a reversal of support or a break of support for next trading opportunity on cable. And obviously today's information could give us a strong move either way. I think if you did get an intraday reversal, a little bit harder to trade, because if we reverse from today, if there was a bit more hawkish sentiment from that meeting, you'd be a bit in no man's land. So for me, I'd rather just, wait a few days, wait a little bit, see where the price getting close to one of our key levels rather than trading it in the middle of a range. If we go to some indices, and let's start off with the volatility index, definitely one to watch. Volatility has been at lows, trading at lows that we haven't seen since 2020, and that's early 2020, January 2020. And obviously that correlates just before that huge spike in volatility we saw when the onset of COVID, or certainly the panic around the pandemic, and that's part of that pandemic. So volatility is cyclical in nature. We do seem to have support around about that 14 mark. If we do get a bit of a stronger push here, move out of oversold territory, we start targeting to move back to 1840. And we know with this can move quite quickly. And we did see that move in volatility, likely, not definitely, likely be accommodated with some dollar strength, which we saw on that initial dollar basket chart, and some weakness in equity markets. But that's so we're waiting to see. We're watching this. We're watching this cyclical indicator. We're looking for a strong move up. If we do get a strong move up, I think it would suggest a bit of risk off in the marketplace. NASDAQ 100 or US Tech 100. Now we have had a strong run, obviously an outperforming index in 2023. We've just traded to new highs, and then we've had this bearish engulfing candle pattern. Now this bearish engulfing candle pattern follows what we saw a little bit of these shooting stars. Those are negative candle patterns, but it's not a suggestion to trade against that underlying longer-term trend, but it has suggested a bit of a shorter-term correction. We have started to see that. So bearish candle patterns from overbought territory, and we are seeing now finally a bit of a pullback from that overbought conditions. Now, I don't think that pullback is quite ended just yet. We do have some green shoots today, but a long way to go still for that. But certainly, approach here is not to look to short the tops or pick the tops, but rather to wait for weakness to play out and look for long entry. The first point for me, where I'd like to see that happen, is somewhere about 16,980. See the price getting there and just ticking back. You could argue if we do have a positive close on today's candle above the halfway mark of this red candle, that could consider a very shallow pullback and continuation of that uptrend. And obviously, the first target on the upside is going to be that previous high, sitting about 17,650 odd. So we're watching today, but certainly does feel like we could have a little bit of a deeper pullback. First level of support, which I'm watching to look for long entry, it's about 16,980. I do want to see the price ticking back up off that. But certainly from that level, any of these lower levels, and you could have one in between, probably sitting about 16,675 possible entry opportunities into a pullback. If you look at the S&P 500, as you can imagine, the picture not that different. We do have this historical support level not so far away, 4,850. We do have this bearish reversal from that short-term high, an aggressive move higher, and supported by that move out of overbought. So not a signal to trade against the trend, in my opinion. That longer-term trend bias is still up, so we're looking for pullbacks, waiting to see where the price settles to join that trend. 4,815 is historical resistance now, considered support level. This point that's probably start to look. Personally, I'd like to see a bit of a deeper move out of overbought territory, maybe even like pull back towards that 4,785 odd at first. But I'm not going to guess the level. We're going to see where the price finds support into this pullback, and only if it became a very, very deep pullback would we call it a correction. And then we're far away from a trend reversal at this point in time. So it's really about buying the pullbacks. And trader Alan Farley used to say he likes to buy the first pullback from each new high, and we have started a bit of a pullback from that new high. All right, looking at the DAX 40 or the Germany 40, similar picture where we've had this move higher. We've reached a high. We found resistance at that previous high there, sitting at about 17,000 odd, and we have started to pull back. Now, this could be a shallow pullback if we do see a stronger close above the halfway mark of that preceding candle, suggesting that move up. But we are still in overbought territory. So it might be a higher risk trade getting involved there. So personally, I'd like to see a bit of a deeper pullback towards one of those levels of support, 16,530 being that initial support. Looking for the pullback, waiting for a bullish reversal around there or slightly deeper for long entry. we do get reversal today, would suggest that we are continuing, but I think it's a little bit of a high risk trade due to the fact that we are sitting very close to all-time highs. Initial target obviously being moved back towards that 17,000. Now, FTSE 100. This is the range that has been persisting for a very long time. So market environment is a trading environment, not a trending environment. It's that sideways consolidation that we've seen. It's worked out quite nicely over time, looking to trade between the levels. The last level, that we were talking about in 2 weeks back was at 7,400, and we're seeing how the market was approaching that level. Well, we did have that reversal, and we've had a strong rally towards what was our resistance target initially, 7,700 at the moment. Then we've had that bearish reversal, and then that's been followed by this big green candle today. So it's a bit of an ambiguous signal there. For me, I'm still looking at rather, we are overbought. I'm still rather looking for a short position closer towards this resistance 7,700, 7,045, where I'd start looking for long positions rather is to be a break above resistance, which is still a little while away at 7,745 mark. Or in the event of a pullback, I move back towards this 7,410, I'd be looking for a long entry there. But for now, me personally, I'm looking for a short entry on any type of reversal closer towards this level. We did have one. It is being negated at this point in time. So I think we could be a little bit early on that. And certainly if we do stop breaking resistance, we change our mindset. We think we've got an upside breakout. We should be looking for considering long entries. But range-bound price environment persists, and we are overbought close to resistance is the bottom line. So we don't have a clear signal right now, especially when you take into context the rally that we are seeing right now. Preceding candles, if this rally, today's candle does fade, though, we see this green candle start to turn red, then I'd say it could be game on, looking at a stop loss on a close above this reversal high, 7,690 or towards 7,700, whilst targeting move back down towards 7,410. All right, moving over to some commodities now, starting off with Brent crude. Brent crude, longer term range bound price environment. When we zoom out, we can see there's just a broad range. We are trading between levels. We had a consolidation within that consolidation. We had a nice breakout, and we've traded towards our resistance targets. That initial resistance target being, or that sort of higher resistance target being about 84.50. We're just short of that. Now, what has happened since then? We've had a bearish reversal from overbought territory. So we're having our first pullback since that breakout and that move higher. And we are putting back the next level of support, considering at 79.20. Now, this could consider long entry if you have a strong close on that green candle above the halfway mark. It's about 81.50 above there. In which case, then we target this recent high there, 84.15 odd, and then you could look at a close below that reversal low as a possible stop loss indication. Now, gold. Gold has also moved into a broad consolidation. Previously, we looked at the bullish reversal there, and we're targeting a move towards that 206. So we had a spike close up to there. We'll say that this move higher has really not really got going. So it's a bit of a tricky one on gold. It is meandering along, some prone to obviously intraday spikes, and obviously that inverse correlation with what we do see with the US dollar at this point. The high there being 205.5 or 205.6, so just short of that initial target. And you could consider, as a function of this move higher, this could be a bit of a shooting star, so a bit of a negative connotation. That pattern for me wouldn't look at trading it in isolation, but the following candle I'd like to see a lower close, and that would be a bit of a bearish engulfing to accompany what we saw, which was that shooting star, so two negative candlestick assumptions. So in that scenario, I would like to see a bit of a stronger bodied candle there, a bit of a bigger bodied candle in that scenario, targeting a move back down to 2010. But again, another range-bound price environment. We're looking to trade between the levels, or we look for breaks of the levels. This is a tricky one because we are sitting in the middle of a range right now, but you could argue that there's a bit of an intraday bearish reversal. If we do have a lower close, like it is currently sitting, maybe if it's even a little bit lower, that would be a short-term bit of a bearish assumption for the price of gold. But certainly not a big one, relative to levels of support being quite close, and that next level of support being 2010. Last but not least, platinum, spot platinum. The other one's been conforming quite well to the whole range trading type environment. We've had a move back towards that 940, slightly short of that 936 odd was the high. Since then, we've got this gravestone doji, this candle with almost no body, that long upper wick showing the price being rejected. When we looked at that gold, that shooting star also showing a price rallying up, that long upper wick showing a price rejected at a certain level. So also correlating obviously some dollar strength there. But we saw intraday reversal, which is being continued at this point in time, and it's also from overbought territory. So move lower, these do suggest a short-term move lower, these indications, and that does pick 893 odd, that initial. It's not labeled in the chart, but I think that is a relevant level around about that 890 to 893 level support, sitting at about $912 an ounce right now. And through that, we start looking about 875. But yeah, bearish reversal, supported by overbought signal, suggesting short-term weakness on platinum. All right, that's all the charts from me. I'm Sean Murison, Senior Market Analyst at IG South Africa. And thank you very much for watching.